Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about KRBL. Should you buy the stock at these levels or one should avoid it? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about KRBL, here's a small request. You can support me on Patreon. Once you do that, if you help me grow the channel, help you also ask questions and eke out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. Also, you can pay $100 upfront. You get 1 year access by paying for 10 months. For detailed market or company talk or number of stocks you are holding or you want to build a portfolio, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can join the WhatsApp membership or other forms of payment are also available. You can directly email me. Now about the company, KRBL was established in 1989. They manufacture mainly rice products and they exports to a number of countries globally, especially in Middle East, and boast of many brands. The market cap of the company has dipped over the last few months, 2-3 months, and the market cap currently holds at around 4,800 crores. It has a popular rice brand in India in the name of India Gate, which is extremely popular in India and the Middle East. If you look at the financials, these are March 2022 numbers. So sales went up by only 1%. There wasn't any growth in sales, and there was a dip in profitability in March. So there was a dip on account of lower margins. Mainly margins dipped appreciably, and so there was a profit dip of around 20%. Sales have remained flat. There is high promoter and institutional holding in the stock. Return on equity has reduced to around 12%. Margins are now 16% from around 19-20%. They have dipped appreciably. In terms of the stock has relentlessly fallen over the last 5 years. It has done virtually nothing. In fact, it has gone down a lot from those highs of 5 years back. So stock is down something like 67%, 70% in the last 5 years. Hasn't done much. Average return ratio, demand has increased globally, but the performance is not that great because of operational inefficiency, and there are a lot of cost pressures on the company because of fuel costs, because of you can say freight cost, etc., and many other costs are linked to the production. So margins have shrunk over the last 4 or 5 years, and that's why the stock has got beaten up so much. In terms of the business aspect, they began with rice snack in a competitive market. They have began with rice snack products, so that is something to look forward to probably from FY23 onwards. They need to further establish brand and gain share. So this is something that could do well, but they have to probably establish their positions and have some sort of market share of relevance going forward. They have just begun that. Probably a year has gone into it. Reduction of debt is extremely crucial. There is a lot of debt on the company, so it needs to reduce going forward. No pledging is a positive with lower debt. So the thing is, there is no pledging at the moment, but debt has to reduce in order to have a bottom line increase in profitability, because there will be cost pressures even going forward. I don't see the fuel prices and other kind of cost pressures going lower because the interest rates are getting hiked all over the world. So I think if the company is in any sort of debt, that will have a detrimental effect on their numbers. Stock has been beaten up to pulp, but the point here is it will be very difficult for stock to perform unless numbers on the bottom line increase. If you look at the technicals, then there is heavy resistance between the 250 275 levels, and that's from where the stock reversed from in the last 2 to 3 weeks. I made this presentation about 2 3 weeks back, so it looked like that the stock is breaking out, but now the stock is around 200. The support is around 180 190, so it is nearing its very strong support levels. So I think on declines to current levels, probably 200, or declines to 180 would be very good levels to buy into the stock. It looks extremely weak on charts, and the major breakout is only expected at least above 230, if not 260, but above 230, which is the 200 DMA. So it doesn't look like that even for a trade it's a very strong pick, but you can trade with a stop loss of 180. So I would say buy only as a trading play with strict stop losses, probably 180 as your stop loss and 230 to 40 as your target. Buy around 190. Keep track of numbers and put strict stop losses whenever you're buying, because this could easily go down another 20-30% from here on in. There are better companies available in other sectors, in the same sector, etc., and have less than 5% exposure into such stocks. So this was a video on KRBL. Please like and subscribe my channel. Hit the bell icon so you get my videos straight away when I post it, and kindly subscribe to my Patreon network. Thank you.